The final section of our top-down analysis, where we're going to justify our weights in our portfolio shoot and debate, is the industry sector and the individual share or firm-specific information. Now this, once again to remind you, is Group A and Group B's investment decisions last week and this week. So they've got to justify a change of 20% in Westpac positive to negative 20% in National Australia Bank from the top down, from the national and from the sector and firm specific information that they will obtain. Why is the sector and firm specific news next, and why is it important? Well, this represents the final layer in our top-down approach, and here we consider how the sector has performed and its outlook into the future, and we also consider any firm specific news too, in particular over the last week, that we haven't incorporated into our portfolio. Now, once again, each individual in the group will be required to look at the section of the individual portfolio quiz which will consider sector and firm specific news. And each individual prior to the actual tutorial debate will be required to find a number 2 news stories in each sector. So if we look at the individual portfolio quiz, starting at question 14, which is where the sector information begins, we can see first of all a graph of all of the sector performance for each of the sectors that we're interested in. In purple, the mining and metals; in green, financials; in darker green, the not commodities, but the Woolworths and Wes, the staples, consumer staples; and in red or purpley, the all ordinaries. And you can see that performance over the last year has been pretty poor, where consumer staples has been best. And what this asks you to do is to rank the performance. Then what you do is you look at sector-specific information in question 15. And you look at 2 major events that have occurred in each of the relevant sectors. So we start off with mining, and we press on this link, which pops up a AFR generic news database which we can query, and we can look at BHP mining sector specific stuff. And what we find is that for BHP there's an Olympic Dam approval which is on track, and you'll see in the video that Group A will talk about this and talk about how it's positive for BHP. On the other hand, you'll also see that there's some information on Rio Tinto and its bidding war between Chinalco and BHP for Rio Tinto. And there's some news about that and how there's a negative associated with that. And once again, that'll be mentioned in the video. Then we look at consumer staples, and we can see that there's some news about Woolworths, where it has a syndicated loan facility, very important in times of global financial crisis, and how it may or may not use that as a fund for overseas acquisition here. Okay. Then there's a little bit of information here about Woolworths and how it's performing in terms of its grocery section. The final section in question 17 is the banking sector. And we can see that the 4 big banks' combined profit falls, and we can see that there's some bad news both for Westpac and every other bank. And Westpac is cautious. However, we use some information from Yahoo about that, and once again that'll be talked about in the individual quiz. So you can see that that information is sourced prior to the quiz by each member. So each member comes prepared to the quiz and prepared and able to make discussions. So in this context, once that's done, I'll show you the debate, and that'll be next.
Go. Now I'd like to look at sector-specific information and how we're deciding on our sector-by-sector weightings. Firstly, if we look at the financial sector, overall we still think that the financial sector will continue to fall due to the continuing financial crisis and the fact that the problem really hasn't been fixed yet, and so we think the financial sector still has a number of problems. Specifically, we think NAB is the worst off out of Westpac and NAB just because it has a lot of foreign exposure, especially in the UK where their financial sector continues to have problems. We also think that NAB is less well protected than Westpac domestically, and then it has greater exposure to losses and bad loans and areas like that. In terms of commodities, as I said before, with the macro exposure, we think that commodities will continue to go up, and recently, commodity prices are starting to pick up in the commodity sector. Specifically BHP we think is better off than Rio because they have this announcement recently that was released on Yahoo about the Olympic Dam mine site, and that looks like it'll be positive news for BHP. As well, we think Rio is just stuck in too much of a quagmire with the Chinalco deal. The fact that it's continuing, it's a lot of uncertainty. We don't know what's going to happen to the Rio share price. So we think BHP is a lot more reliable as an investment in terms of capturing that commodity increase. Finally, in terms of the consumer staples sector, we think that its sector is, over the past year, it's continued to remain the best performing sector out of these three. It's continuing to perform not too bad, and we think with the increase in the economy it will continue to perform well. Specifically, Woolworths has been a very stable stock, and they're continuing. Recently, an article in The Age talked about Woolworths heading overseas. They're expanding, so it proves they're in a strong position. They have a lot of core strength and core equity that they can expand based on that. So we think that they're in a much stronger position than Wesfarmers, because Wesfarmers are still focusing on their restructure of coal, so we think they're in a much weaker position. So that's why we've made those specific sector by sector choices.